Hi folks, it's Doc Severson for ReadySetTrade here on Friday, the 12th of February. There's about an hour left to go in the trading day on Friday, just about to close up shop for the weekend for a 3-day weekend here because Monday is a market holiday. Some of you in the 10X tribe may wonder what on earth we in the elite group are doing, and I wanted to give you an example of a typical trade that we take. And we look to take 3 days a week on Monday, Wednesday, and Friday. It's called the zero DTE or 0 days to expiration trade, where we're selling an option which expires the same day. So it's almost like holding an ice cube in your hands as you walk closer and closer to a fire. It really melts that rapidly. Now, when we sell an option, we generally want it to stay within the range. And what I don't want to do is when we get into one of these things, have it take off in what's called a trend day, where the price just opens up and just keeps on trending until it goes 30, 40, 50, 60 points distant. And generally on a day like that, we get run over on these trades. So we'll do anything that we can to avoid that. So we use what's called the opening range to be able to filter that out. You can see the opening range here. Here's the opening bell. And my indicator here starts to print out the range of the first 30 minutes of trading after 9:30 a.m. Eastern. In last night's newsletter, I made the reference to today being a swivel chair day. A swivel chair day is one where traders get their positions placed early in the day and then swivel on their chair and bolt out of town because it's a 3-day weekend, so they want to get an early start. So what I've seen in the past is that we don't get a whole lot of movement after the first hour or so. So I wanted to take advantage of that, and I wanted to establish the opening range, and if possible, if it was looking like it was going to be a fairly mild day, get an early entry on this at around 10 o'clock. Usually we wait till about 10:15 to make sure that it's still not a trend day. So we wanted to get an early start on this one. So at about, I think it was just about 10 o'clock, 9:59 or so, you can see this is where it switches over. We've gone through our first 30 minutes of the day. We've printed the opening range and it looked very mild. So I said, let's go for it. And we set up the trade. So you can see here in the platform, this is what we sent out immediately after entering the trade. So we did it live in the room. So the people that were in the room could see what we did, but also for the people not in the room, if they just wanted to be alerted through the platform or through email, there you go. Here's our trade entry. Here's the profits, as well as the stop prices that we were going to use. And this is what the trade looked like on the analyzer. Now, this is near the end of the day, so this has definitely burned off a lot of time value. But basically, during the early part of the day, what it looked like was more like this in terms of the profit and loss graph that we care about. Like that. Now the blue line never changes. That is the expiration profit and loss. And don't get too excited about the potential profit peak here. We never take it up that high. We're just looking for our fair share. For most of these trades, we're looking for a quick 50 bucks. Get in, get our fair share, get out. So we entered at about 9:59 in the morning. And then I think we got to about, I think it was 10:20 or so, 10:19, 10:20. Somewhere in this area right there, we were out because we did get that nice sideways price action. So once again, we sent out the update saying, here's the exit. Here's the trade that we closed. We closed it for a $50 profit, 9% return on risk. Nice way to start a long weekend. Now, what I will quite often do is on the side, place something with a little bit more of a target. So in a different account, what I did was I placed the same trade basically in the same spot. So let's see, it was right in here. So this was the same trade that we were taking. And this one I took with 2 contracts, and I wanted to run this for $100 profit per contract. So you can see in this case, we got in about 10:10 or so. Now the exit for this trade came much later, took a lot longer to execute the exit for this trade. And this is because the more that you're looking to extract out of the trade in terms of profit, sometimes the longer that you have to hold it, certainly, but also the more likely is the price is going to move on you. So in this case, it took 2 hours and 20 minutes to get that double in profit, that extra $50 in profit per contract. And you can see if we go back to our price chart here, all of a sudden the price started moving a lot and it went away from the center of that profit target. But what we normally find is that the price movement is very cyclical. It does tend to move around a lot. And so by the time that we got to 12:30, profit target was achieved without a whole deal of stress, but you just have to hold in there for, in this case, another 2 hours. And you can see with an hour left to go that the profit curve that's showing on here, the real-time profit curve, which starts like this at the beginning of the day, eventually starts to move up like this, as you can see, this yellow line. So it starts to move up. So higher profits are available. However, the risk is that the price may move on you. Now, again, this is a trade we call an iron butterfly. We use these for times where we expect to see lower volatility, or when there is lower volatility, there's less range that's anticipated or being priced in for the market. And this is one of the faster, more responsive trades because the time value decay occurs so quickly at the money like this. Now, we could play it safer. We could go way out of the money on these trades and build something with a huge range to them like this. During today's price action would have never gotten anywhere close to these. However, the cost of there is time. So not only are you looking for a much smaller potential profit, but it's going to take you all day for those options to decay enough for you to take your profits and head out of town. So it's a good example of why we use the iron butterfly. 21 minutes in, out, and done, ready for the weekend. That's it for this video. I wanted to give you an example of what we do on a daily basis here in the Elite Room at ReadySetTrade. Hope you guys have a great weekend. Nice 3-day weekend. We'll see you back here on Tuesday when the market opens again. Take care and have a good one.